Good morning, everybody. Very warm welcome to all of you. We're running a little bit of a tight schedule today because the minister has to leave sharply at 10. So we will start immediately. May I request, before we get underway, may I request the presentation to be made to the minister, Shri Suresh Prabhu, Honourable Railway Minister of India and G20 Sherpa as well for Government of India. Purva, may I request you to come and welcome the minister with a bouquet. Please give him a round of applause. May I also request Purva to welcome Dr. Naoyuki Yoshino, Dean, Asian Development Bank Institute. The Secretary, Shaktikanta, is on his way and will join us anytime soon. Shri Suresh Prabhu, Honourable Railway Minister, Dr. Naoyuki Yoshino, speakers who have come from many G20 countries, and I see several in the audience who have come to our conference before, media participants, distinguished guests, a very warm welcome to ICRIER's 7th annual G20 conference, which is titled Challenges to Strong, Sustainable and Balanced Growth. Before I briefly talk about what lies ahead, and I'll be very, very brief, let me take a moment to recognize our partners and sponsors for this conference. IMF, Tom Richardson is here. World Bank, Honourable is traveling, but Poonam Gupta is here, who will be speaking at another session. CAS, Dr. Smith and Pankaj Madan, and ADBI, Dr. Yoshino, representing ADBI. We are at a time when the global economy, as you know, is going through some amount of turbulence, and while the US economy is performing well, the tepid recovery in the Eurozone, slowdown in China, lower growth in commodity exporting countries, particularly Latin American countries, are raising some concerns. The G20 Leaders Platform has been performing quite well. The Leaders Platform has been performing quite well and has had coordinated discussions on global economic and financial issues since the financial crisis of 2008. And the focus has been, as you know, on reducing risk, volatility in international financial markets, controlling unemployment, and supporting an open trade and investment regime. In 2014, the finance ministers of the G20 set themselves an objective of increasing world GDP by 2 percentage points, or about 1.5 trillion over the next 5 years, over and above the current business as usual trend. So we'll be discussing many of these ideas in the sessions that lie ahead. Let me just say that ICRIER since 2009 has been organizing this conference, and this is the 7th, and we have many issues that lie ahead of us. At Turkey, they have taken a decision to focus on the 3 I's in the G20. The meeting, as you know, is on the 15th and 16th of November, and India will be represented, and the focus is on the 3 I's: inclusiveness, implementation, and investment. Through all this global turmoil that is happening across the world, including what's happening in China, which we will be discussing in a session later in the day, India stands in quite some contrast. We have strong fundamentals. We are placed to push economic growth, low energy prices, current account deficit is under control, the fiscal deficit is under control, the significant decline in inflation, increasing really the policy space to try and boost growth through interest rate cuts. Despite the increase in policy space, we have a number of challenges, and I won't go through them, all those infrastructure bottlenecks that we face. The way we've organized this conference, there are 9 sessions that we will have after the inaugural session. There are 9 that focus on international finance, policy coordination, beggar thy neighbor, competitive devaluation, how to finance clean energy infrastructure, on global value chains. So they are the agenda is pretty much in line with what the G20 agenda has been. And then we'll have a session on base erosion and profit sharing. And the last session is on urbanization, income inequality, and health inequity. But I won't say more. We'd rather hear the minister, but let me really warmly welcome the minister to our conference. It's a privilege to have him here. He is as I said, the railway minister as well as our G20 Sherpa. In his first spell, he headed important ministries between 1998 and 2004. As you know, this is his second round in the government. He's a chartered accountant by profession, and he has held several government and quasi-government positions. I'm happy to say that he's one of the most dynamic ministers in this government, and the railways under his leadership is going through a major transformation. On a personal note, ICRIER is very happy to be associated with the railways in a project on decarbonization of the railways. Before I invite, all the CVs are in the folders of the speakers on the dais and for the other sessions, so I won't go through each one of them. Before I invite Suresh Prabhuji to inaugurate our 7th conference, let me once again thank all of you for coming here. I once again recognize our partners, IMF, World Bank, CAS, without whom none of this will be possible. And we'll have a vote of thanks at the end of this 2-day conference, but I just want to stop and recognize for one moment Purva, who's been in touch with all of you, who's meticulously organizing, sending out mails, organizing the sessions. Purva, can you stand up? Yes, she's been in the back end of the conference. I hope all of you will have a productive and stimulating conference. With that, may I request the Honourable Minister Shri Suresh Prabhu, our Sherpa as well, for his inaugural speech. Thank you very much, and a warm round of applause for the Minister.
So good morning, friends. Let me first of all thank ICRIER for organizing this event, which they have been doing it regularly just before the summit of G20. And I think this is an excellent idea, because to bring together all the stakeholders and to know their views, their opinions, their ideas before we commence the summit is something which is an extremely useful exercise for those who lead India in the G20 summits. So I really wish to, first of all, congratulate you and thank you also for doing this excellent job of bringing so many stakeholders together, not only from within the country, but few from outside as well. So I wish to thank you and congratulate you for that. I know I have a very difficult task, because my good colleague in the government and my good friend is going to be talking about, Mr. Das will be talking about a keynote address about what? The economic situation, etc. So he'll, I'm sure, will do a commendable job in letting you know, as well as my other friend from the Asian Development Institute, who is going to be giving a perspective about the larger issues. So I think I have not much to do, because the Indian position will be very well articulated, so would be the global situation will be explained, and therefore I would just confine myself to making few comments in between the real sessions which are going to begin in the next few minutes. It's very interesting and in a way ironic that the G20 grouping, though started much earlier, took a real concrete shape at a heads of government level in 2008. And what was the trigger for that? Was then the so-called global economic crisis. That time was essentially emanating from the banking system of that kind. We had seen the collapse of certain institutions. The US, the largest economy, had to come and talk about rescuing the banking system by using public money. So was the Europeans. And we said that there are certain institutions which are too big to fail. And therefore we had to actually put some oxygen. I mean, artificial oxygen is all right, but real money into putting the system. And that was 2008. And we thought, if you don't bring together the other 12 countries, which otherwise used to not be participating in the G8 summit, will not be really representing the reality on the ground if you want to deal and actually respond to the global economic crisis then prevailing. I was saying it's ironic because while we are going to be having in the next few weeks a next summit in Turkey, we still are facing probably, I don't know whether it is bigger or smaller, but still a challenge on global economic front. So maybe that particular challenge we could meet by responding in some particular way. I think this is the time we could respond to it in a different manner, and I hope we do that. Interestingly, the G8 countries where it really started initially at that time, and therefore they got together. But today, it's not only G8, but little outside also of the G8, that there is a real trigger for this crisis today. So it's very interesting that now we need to find out a collective solution to this very challenging problem that we are facing today. As we have seen, when we started globalization several decades ago, we had a GATT 1948, turned into WTO a little later, and we really could reap the benefit of integration of global trade in terms of huge expansion into global economic output. This was, in a way, very unprecedented last few decades, wherein the economies of the world, global economy, expanded at unprecedented level, probably not seen any time in the global economic history before. And that brought in a very interesting idea that more we integrate, more will be the benefits. And then we started integrating. We integrated the global trading system. We are still trying to integrate the global system of trade in services, still not successful, and India is one strong champion of doing that. We are still not even nowhere near integrating the global labor markets. And that's something which again has been one of the serious issues. Sometimes we get forcibly integrated. When we saw recently the refugee crisis, then people had to adopt them. But just imagine, we still do not have a proper integration in other two sectors of services and labor, which has created its own problem because we seems that we have a very partial integration which benefited us, but also not necessarily benefited to the fullest extent that we were expecting, because two other important segments of the integration didn't happen as it should have been. Now, integration got benefits, and now integration also is posing challenges. Because whenever you see that one country, a large enough country, faces and creates their own system, own policies, it has a ripple effect on the rest of the world. We are still hoping and waiting for what's going to happen when the Fed meets in the next few days and going to decide their own monetary policy. Each country has definitely a sovereign right to decide their own monetary policy. But when we realize that we are so well integrated and the impact of one country's monetary policy has on the others, I think we really need to have some sort of a very cooperative and very involved arrangement to actually deal with this issue. So we are waiting for that. As you mentioned, China devalued their currency. There was a huge, almost more than 40% of drop in their share value. The markets were in a turmoil, which had a huge impact on the rest of the world. So what is important now is that while we had some and huge benefit of integration for the world economy as a whole in the previous decades, now we are also to deal with a situation wherein integration could also pose certain challenges. And how do we deal with that challenge is something which in my opinion should be one of the most important issue before the global community, but particularly because G20, because they together account for almost 85% of the global economic output. And therefore, how do you deal with this is going to be an important issue. I know we have this particular challenge, and I think if we do not create a new system of having monetary policies of each country, takes into account the challenges that other countries who could be affected by them, also there has to be some sort of an understanding and integration. Our own finance minister, who went to Turkey recently for the G20 finance ministers meet, has also articulated this concern of us. But I think we really need to create a structured institutionalized arrangement to deal with these issues, to make sure that one country's own domestic policy do not create a very destabilizing effect on the global economy as a whole. And that's something which is going to be, in my opinion, one of the very important issues that we'll have to be flagging off, discussing, and finding out a solution. I must, while we do this, it's my duty to point out that there was a very interesting Australian summit. And I must congratulate the Australians for doing really a great job. They organized this summit so well. In fact, they had a very useful suggestion for everybody that the final declaration, the final communique, should not be more than 3 pages. So, of course, I was telling my Australian friends, 3 pages is a very good idea, but I hope the length of the page also don't increase. But as it turned out, these 3 pages were very focused, very interesting ideas, and Turkey has done even a commendable job in trying to not only organize the event in very, very professional way. The summit has to take place, but I'm talking about event leading to summit because there are at least 4 Sherpa meetings, there are finance ministers meeting, there are agriculture ministers meeting, and so many others who keep meeting and descending on Turkey. And they have done a great job. And therefore, I'm sure when we meet in November for the G20 summit, they would have done as good a job as the Australian did. And now next year, we are moving to China. And China, again, is really preparing for it. And I'm sure China will have an added responsibility because it has become the 2nd largest economy of the world. It has a huge impact on the global economic policies. So they would also try to stabilize the global economy in the next year when we meet in 2016, in China. So it is something, the agenda of G20, which was started with Australia, expanded in Turkey, and I'm sure we'll like to add more, but we must focus on implementation, which was one of the key areas of the G20 idea also, that while we have take new ideas, and it always inevitably happens that a country which is hosting it feels that they must add their own ideas, and that is useful. But if we do not implement what we agreed before, then adding new agenda becomes a little bit sort of misleading to the world community. Because when we meet in G20, it's not just 20 countries who meet, who are around a table in the summit who matter. But there is a responsibility on the G20 summit also to look at the concerns of those who are not present in the committee, in the meeting. Because that's a global perspective. There are only 20 countries here, maybe 85%, but large number of people are outside. And therefore, we really need to look at those concerns. And therefore, India has been very consistently saying that along with economic issues, which are so important, so critical, which includes monetary policy, which includes policy related to the currencies, which related policies related to devaluation, policy related to how do you create new market access and market prohibition, and all those issues are important. But we must also focus on social issues. And in fact, the social issues are so important because if we have growth, which we saw in the last previous decades, if the society does not benefit, probably it creates social discontent in any country of the world. Even in the most developed countries of the world, that is a big challenge. And therefore, what we describe now globally is something like a jobless growth. And that was something which was the cause of concern. So now, when we are going to deal with how to respond to this new economic situation in the world, we must now take this as an opportunity to find out, could we integrate social concerns into new economic policies? What would it mean? It means many things. In fact, you have pointed out the 9. If time permitting, I'll just respond to each of them. But broadly, I think employment is going to be a very critical part. If you do not create employment, and if you only feel that economic situation has to improve, therefore we must put in, it is not going to be a tenable or sustainable. I'll give an example. We always feel, and India also encourages, the G20 also encourages the participation of private sector in a big way into this. It has to happen. The private sector-led growth is several times more efficient, more productive. Use of capital also is done in an efficient way. The ICRIER is also better as a result of which, but not necessarily will give the desired result. I'll give one example. In this particular situation, even today as we speak, the global top companies of the world